Welcome to the Banking on Innovation podcast. Today, I'm very pleased to invite to the podcast Jamie Warder, the Chief Digital Officer and member of executive team at KeyBank. Jamie, welcome to the podcast.
Jody, thanks for having me. Good to talk to you again.
Jamie, you've always been very thoughtful and provocative on delivering superior customer experiences, and I'm so pleased that we have a real thought provoker like you to join us today.
Thanks for saying that. I won't take that credit, but thank you for saying that.
So, Jamie, let's talk a little bit about your past. You've had a very distinguished career, now in banking, of course, but formerly at McKinsey, and before that as a captain in the U.S. Army. Let's start with your time in the military. How is innovation embraced in the military, and what seeds were planted for you personally that you're using later in your subsequent career in banking?
Oh, yeah, that's a interesting question, Jody. If you think about the military as a very large organization, right? Very similar to, corporate America or, large nonprofits. But like any large organization, it just can't be static. I think back, in the 80s, the military was protecting the Fulda Gap in Germany from a Russian invasion. And obviously, if you fast forward just a few decades, there's a very different kind of mission to prepare for. So that requires innovation. And if we really think of innovation as just it's a non-static playing field out there, and being able to morph and adapt to what's going to help you win. I think some of those things have to show up in our military. They have to show up in, corporate America, because we do have an ever-changing landscape. And, if you think of innovation as just staying ahead of that, trying to understand where you think the world is going and getting ahead of it. So I don't know if I can say the military taught me that, but I certainly have seen innovation in the military. And I certainly have seen innovation after I've left the military. And I think it's necessary and required in both organizations.
Yeah, how important it is to, regardless of the kind of institution you're part of, to be able to embrace it. So then you went into banking. You were at PNC, Capital One. Then you were president of USAA Bank, and now in a very significant digital leadership role at KeyBank. How have you had to evolve your own approach to driving innovation now, in terms of, you're one of the leading regional banks around with their digital capability?
Yeah, I feel like I've been really blessed in my career to have seen how different organizations that all have very different contexts and different business opportunities, how they treat innovation. And I think it's those series of experiences, be it at USAA or KeyBank here or Capital One, just how they view innovation differently. There's a few themes that I've taken from each of those organizations that I think create my perspective on innovation. Here, a few of those would be one. I do think you have to think about innovation in horizons. Thinking about what can you innovate this year might be different than innovation that you're thinking about 5 years from now. And by the way, innovation that you're doing in kind of the nearest horizon may be a little less different than today. Might be slight tweaks, might be that relentless incrementalism. Whereas when you're thinking about what's the world going to look like in 3 or 5 years, it just requires you to think about that a little differently. By the way, you may not even implement. You may just be thinking about it and designing without actually going into implementation. So first, it's just this idea of multi-horizon thinking when you're thinking about innovation. The second, and I've been on both sides of this, I feel like there's been times in my career where I feel like we've gotten it wrong, and other times where I feel like, we've gotten it closer to right. But really thinking about innovation and how it ties to business strategy. There are more than a few occasions where I feel like we've been innovating for the sake of innovating, as opposed to starting with strategy, having a clear articulation of who we're trying to serve, how we're trying to serve them, how we want to differentiate from others who are trying to serve them, and then using that as a frame for innovation. And I've just found when innovation follows clearly articulated, well documented, and thoughtful strategy, that innovation tends to be more impactful. So that might be my second. Third thought is, and all these things I feel like I'm guilty of being on the good and bad side of, but sometimes I think we overthink of innovation as technology. One of the innovations I'm very, very proud of at Key right now is we've been doing a lot of innovation on how do we allow small startup nimble companies, typically that we've acquired, how do we allow them to keep their culture, their spirit, their speed, but within a larger, regulated organization. So, finding that right, don't crush the butterfly, but, don't trip the giant balance. And I think, there's a lot of innovation happening in that topic. It has not a lot to do with technology. So this idea of innovation can be around process, it can be around people, it can be around a bunch of different topics. And yes, innovation can certainly be around technology as well.
What great points. So having innovation in service of the strategy, thinking about it in terms of a multi-horizon play, and then also the need to drive innovation as part of your agenda, even in the near term, even as you're trying to, let's say, catch up on other capabilities. Because what we've seen sometimes is that, okay, we'll just focus on the basics. We'll try and get to parity, and then we'll do more creative things for our customers after we get those foundational capabilities in place. And I think based on your comments, I'm hearing you say it's got to be part of the agenda at every step in terms of the horizon approach as well as in service of the strategy.
I think you can't be so focused on, hey, we just need to catch up, we just need to get to parity. If that's your only focus and you're not thinking of any places that you're going to innovate and differentiate, I don't think that's probably the right mix. Nor do I think trying to be, different and innovative everywhere is the right. It really is this mix of there's going to be places where, you're fine just being, on par level with the others, if you will. And this is where I think the strategy, and then choosing carefully about where do you want to differentiate. And that's where some of your innovations and doing things different / better is what you'd aspire to.
Great points. So Jamie, as you are well aware, we're in a fascinating competitive landscape. Customer behavior is shifting to digital. We have challenger banks focusing on niche segments, fintech and big tech picking off profit pools, national players investing massive amounts in digital, and you've got regional banks in the middle. So put on your consultant hat and share. Let's just go through each of these players and help us understand what are the challenges that each has to be successful in the current environment. Let's start with the challenger banks.
Yeah, absolutely. Before I even get there, I'll just share a story. We had a board member and we were describing the competitive environment, and she, of course, is familiar, but, we'd spent 20 or 30 minutes as a leadership team talking to the board about the competitive environment. And she said, all I can think of is the movie Lord of the Rings, because, you're dealing with giants, you're dealing with things nipping at your feet, you're dealing with things coming at you in the air and on the ground. And it's absolutely true. This is a very dynamic marketplace that we compete in, which makes it fun and exciting. So sorry, that was my diversion.
Great comment.
The challenger and digital banks, certainly we've seen some just terrific uptake in those banks. And I think, I think their challenge, and I'll for this segment, Jody, I'll just try to put on if I'm thinking about them, what are they thinking about? I think in many cases, the challenger digital banks have figured out, a product. They've figured out how to do kind of day-to-day checking and debit, using that Durbin exception, and it's created a nice business for them. It's created growth. I think their challenge becomes how do we move beyond single product? How do we, look for other ways to take care of their customers while still figuring out monetization? So in a weird way, they started as a monoline and they are looking to become a broader based relationship provider. So I see that as being one of their opportunities. The other opportunity might be there's a school of thought, and I think time's going to tell us whether this is true or not, that challenger banks that tend to be kind of simpler, have simpler product sets, they work really well for a very narrow segment. And that narrow segment, you could say it's the younger, not yet complex, not a lot of financial needs, but certainly as they grow, as they need a home, as they need, the car loan, or they need to start investing, those needs become more complex. And I think, challenger banks have to think about how do we meet that complexity, because I think there's a school of thought that says, you'll have a lot of, college kids, my college kids, banking with a challenger digital bank, until they grow up, get their first job, and then they're going to, get a traditional bank. I think that's still to be seen. I'm not convinced that's the path, but I know that is a school of thought out there.
Yeah, fascinating. So the next group then is let's call it the fintechs, the big techs, retailers, kind of picking off profit pools. What do you see as the challenges and opportunities if you put yourself in their shoes?
Yeah, I might break those up a little bit. I'll talk about each of them a little bit. Fintechs, and I really do believe the fintechs have done a wonderful thing, which is they have, in many cases, they picked a part of the value stream in financial services, and they really focused on it. They started client back. They thought about software and data and the meshing of kind of multiple systems and data sources. It just made it better. They are, in many cases, fintechs for a couple decades have been our innovators in financial services. I think in some cases, especially now with the interesting market conditions, their big challenge will be finding distribution, right? And it's they've created great product, and often they're looking for distribution. And I think that means in some cases they figure out distribution on their own. And certainly some fintechs have done that. Some great fintechs have done that. It could be that they're partnering with distribution partners, banks or other retailers. So I just think they need to figure out, often they've created a great product, and it's how do I get that product out there? Is it through partnerships? Is it through, organic distribution? But I think that's probably what's facing a lot of the fintechs. I mean, maybe a little more timely right now. We're talking about this at the beginning of August. They're probably dealing a lot with just market conditions that would say, I think the external markets are not as interested right now in growth stories as they are profitability stories. And I just think that's, we see that in the broader market. So that's probably impacting some of the fintechs and creating financial pressure on the fintechs, more than in the past. So, again, that need for distribution probably is even more important right now at this point in the financial cycle. Big techs, it's a very different. The big techs, they have distribution often that is numbered in billions, right? They have this enormous customer base. And I think what the big techs are probably thinking about right now is exactly where in financial services do we want to play and not play. Financial services is a complicated industry, whether it's moving money or lending money or storing money or giving advice. It is a complicated industry. And, I think any of these big techs could choose to compete in any of these places and probably figure it out. I just think they're probably going through really important make versus buy decisions. They're going through what's the opportunity cost. They're probably thinking about regulatory implications. So, they have the distribution, and I think their question is, what products do we need, to serve our particular business strategies, and once we know those products, once we know those capabilities, do we want to build it? Do we want to partner, or what's our right mix? Because my guess is all of them will have all of the above. So I think that's what they're facing, just some real strategic choices of where do they want to play? Do they want to play in this ecosystem of financial services? And if so, where? And then finally, retailers, this is something here at Key. We really think we're seeing more and more of banking being embedded into, day-to-day applications. And, look no further. I know it's old example, but look no further than Uber, where the banking is built into the product, or Starbucks is your Starbucks card is a kind of storage facility. Your app for Starbucks is a storage facility. It's effectively a deposit account. So I just think this idea of embedded banking is what we're calling it around here. And we think that retailers will be looking for places where they want to embed banking into their core products. We think, by the way, in financial services, one of the implications is that having the ability to serve customers who want to embed banking needs to be, or could be, part of the mix. So it's something we publicly shared. We're spending time really building our capability and thinking about. So there we go. Fintechs, big techs, retailers. Probably took too long.
Yeah, I'm in a lot of these conversations as well, and I think you're right. Embedded banking. The opportunities and the ability to be creative and embedded as part of a proposition, very compelling. And I think it's very savvy that you're saying that KeyBank is determined to play a role in that, as opposed to be competed out of that possibility. So last one around nationals and super regionals, or even trying to get bigger. In some ways, you can be envious of the amount of money they're investing. But what do you see as challenges on that side when you're at that kind of scale?
Yeah, I think the nationals and super regionals, they have terrific scale. I think scale matters in banking. It matters in marketing. It matters in technology and digital spend. Like I do think true scale matters. Now, often what comes with scale is enormous complexity. It's just, as you scale, you add more capabilities, more products, more channels, more operations, more geographies. And I just think, putting myself in their shoes, my guess is they are trying to manage, how do we use our scale to our advantage and manage the complexity that can come with scale. And I think some are doing that. Some have done that over time very well. Others have tripped on kind of complexity and scale. So I think that's probably, how do they maintain their scale, but do so in a way that doesn't have undue complexity, undue mistakes, undue trips.
Yeah. And then finally, key banks and other regionals, your comment around Lord of the Rings. How do they compete in this kind of environment with all of these other players, kind of using their own strengths to be able to take some share?
Yeah, no, it's the category that I think KeyBank falls into. What I would say is, you can look one direction and say, there's 10 or 15 banks that have more scale. That's the bad news. The good news is you can look the other direction and say, hey, there's several thousand where there's more scale. So, but my real answer is this gets right back. And by the way, for all of these categories we've just talked about, like, I'm a firm believer in being clear about who you're serving and who you're not, understanding those needs deeply, and then differentiating, in a way that's unique. And we actually have coined a term, and it's out there. You can read about it in our Investor Day documents. But, we talk about targeted scale. And targeted scale means we're not going to outscale the trillionaire banks at KeyBank. But what we can do is we can pick our spots. We can pick our spots like renewable energy, like low income housing, like healthcare, where we say in those areas, because we are going to really focus our time, effort, resources, we can actually create this targeted scale. And we have great examples of where over time we've done this. So although I could say this about all of the categories we've just talked about, I think it's important for KeyBank and other regionals to be really sharp about where they want to win and where frankly they're not trying to win, because I think if you try to be strong everywhere, you're probably strong nowhere. So long answer short would be a very focused and thoughtful strategy.
Yeah, love that idea about the targeted scale. So let's now talk about KeyBank a bit more. So customer behavior, of course, has shifted significantly to digital channels. 25% of new KeyBank customers are under 30 who are likely to be more digital native. So what have you learned about customer banking behavior during this time of significant digital adoption, really across all segments?
Certainly, the pandemic, I think accelerated everything a little bit, but it accelerated trends that aren't new trends. I mean, Jody, you've been around this industry long enough to know, like, this has been going on for, you'd measure it in decades at this point. The way I like to think about this is, servicing let me check my account balances. Let me move money from one account to the next. Even a little more complex servicing, like, let me add these account holder or these individuals to my account, or let me, fire off a high dollar wire. More and more, I really think the servicing side of banking has a lot of that has been digitized. I would say that was, we are almost through the evolution, and there is a lot of servicing that's digitized. Sales is a little more interesting, and I'll talk right now about sales fulfillment. So, saying, hey, I want to open a checking account. You said it right. Somewhere between, depending on the bank, 25 and 40% will do that digitally. They'll do it from home. They'll do it from their phone or their browser or their tablet. And of course, that depends on product, because you look at more complicated products like a home equity line, those tend to not be as digital, right? Still, maybe, 4 out of 5 home equity lines will not be done digitally. They'll be done, the old fashioned way. And then, so I think about kind of that sales fulfillment, or that, adding products and services fulfillment. It's digitizing, but it's digitizing at a slower pace. And I would say it's still evolving, and, someday it'll catch up with servicing. But right now, my take is the majority of sales fulfillment is still happening with people involved, be that people in a physical building or over the phone or some such. So I still think there's a ways to go there, and there's still a lot of opportunity. And then the next horizon I think about is advice and advisory, and something your firm does a great job with. But I think more and more advisory is probably one of those areas that's more, and I'm talking about advisory broadly. I'm not talking about investment advisory. I'm just talking about advisory broadly. How much home can I afford, or should I lock my rate at this point? I think that is here to date more of an analog function in financial services, but I think it's also going to be moved to be more digitized. But I would almost put them in that order. Servicing is almost fully digitized at this point, and of course there's exceptions, but it just feels like a very digital world from servicing. Sales fulfillment, it's on the way. It's growing every day, and it'll continue to grow. It's not none of these trends are going to stop. Advisory is a little more nascent, but I think kind of growing over time.
It's a good way to think about it. Almost like that banks are at different stages of maturation in these different kinds of capabilities, all within the realm of enacting or delivering sales service capabilities in service of customers.
Absolutely. And I almost like to think about it. It's just a helpful mental model for me, Jody, is thinking about if you walk into, any local credit union or bank branch, typically you're going to find some activities happening there. There's going to be a teller line where some servicing is happening. There's going to be a platform area where people are opening accounts, and maybe another area where you see a customer in an office who's having a advisory conversation about how to manage their financial lives. So if you're thinking about over time, you're digitizing those different pieces of what's occurring in the physical building, and each of those functions is at kind of a different place and pace.
You've spoken previously on the need to have both digital tools and in-person expert advice, kind of this broader, within this broader rubric of what you just said in terms of advisory, to deliver more personalized experiences. How do you embrace innovation across both digital and the physical channels and ensure they're coordinated to deliver these personalized experiences and personalized advice to customers?
That to me is the tricky question for the industry, right? And this ties right back to our previous, which is in every category of financial services, you're going to find your digital only crowd and you're going to find your in-person only crowd. And the largest crowd's actually going to be those who do some of both, depending on the situation, depending on the day, depending on what they need, or and really thinking about. And by the way, I think it's going to be that way for a long time. As much as we talk about the digital revolution, I think in many cases it's a digital evolution, and these things are going to move, but they're the physical analog great advice of a banker isn't going away next year. We'll be measuring that. We'll be measuring the change over the course of many years or decades. So as we think about that, I do think the right question becomes, how do you create the ability to serve clients, to serve customers where they want to be served. And, if they want advice at home, how are you thinking about providing that? But again, the majority of them have said, hey, I want to talk to someone and see the whites of their eyes or hear their voice in my ear. And how do you accommodate that? It works against something I said earlier, which is, you have to pick your spots and you have to be thoughtful. So I don't know how to answer it, except I do believe that it really is a phygital world, that digital matters, but the physical does too. And by the way, I get that there's places that will compete on different ends of those spectrums, and I would fully expect that. But trying to balance that, I feel like I'm rambling because I'm not giving a good answer, except it's a real issue that I think every institution has to figure out how they're going to address.
Well, back to your mental model around the different stages of maturity and servicing fairly well-formed, sales fulfillment with a lot of progress over the last several years, particularly with let's say simple and becoming even more complex products. But this area of, let's call it unified advice, we sometimes call it connected channels as well, which is being able to capture the intelligence and then deliver it, whether digitally and or in physical channels, and do it in a unified way. It feels like we're still in the early innings of that in terms of that maturation, but so much potential there.
Yeah, and I promise I'm not doing a commercial for Personetics, Jody, but I do think when you start to think about even when it is a person-to-person conversation, being able to use data and information to assist in that conversation. Sometimes our systems can know more about our customers and clients than any one of our humans can. So how do you deliver that when our clients are in a digital channel? But how do you make it available if they want to be interacting with you over the phone or in person? Those are tricky things for financial institutions to figure out, and certainly Personetics can help with that.
It's exciting to see the kind of innovation I think the industry will experience in this space. So let me wrap up by a question I like to ask all of our guests, particularly Jamie, since you're so provocative and forward thinking. What will customers demand from banks and credit unions in the next 3 years that the industry may not be well prepared for?
Yeah, I'm going to talk about a few different. I just think these are macro trends that are happening. The first might be if you think about who banks together, for many, many years, I think that was driven by geography. And, you know, people and businesses chose their bank based on proximity to their home or to their workplace. So, geography was the community in banking. And I actually think, and this isn't super new, but I think it's becoming, I think it's back in vogue, and it's becoming in vogue at scale. Um, but I think more and more that's banking is starting to form around different groups that are non-geography based. So, 30 years ago, there was the firefighters credit union, and firefighters would do their financial services together at that credit union. And then you started to see some big players in the affinity space around teachers, around the military, Navy Fed and USAA, creating kind of affinity in banking. It's one of the things, by the way, we're trying to do with Laurel Road, which is an all digital national bank with just an unabashed focus on the healthcare industry, those caregivers who are taking care of us. So I just think that is one of the trends, is this move from geography to more affinity banking. People who look like me, people who have similar needs in financial services that might be different than more of the mainstream. So I'll call that kind of trend number one. Trend number two, and we haven't seen this as much. I like to tie things to historical, but it's what Bank of America did with Keep the Change. It's what a basic business sweep account would do, but this idea of auto driving accounts, and the way we've kind of grown up in financial services, both retail and commercial, we tend to say, hey, you have to open up all of these different types of accounts that serve different purposes. And then, by the way, we leave it up to you to kind of manage those. You need to determine if you want to pay down a loan or whether you should get more money into this account because you have expenses coming up. And I think over time, we might start to see more kind of universal accounts, or accounts that are tied together with intelligence that know, hey, does it make sense to move some money for you? If you have too much in your checking account, let's get that into a savings account so it can earn interest. If you're saving too much, and by the way, you're paying a lot of interest on a loan, let's take some of that savings to the loan. So I don't know exactly how that's going to manifest, but I just think it's some inefficiency in the system based on kind of how the industry has historically grown up, that I do think there's going to be, opportunity around. And then we've already talked a little bit about what I really think is a third macro trend out there, which is banking right now kind of exists as its own thing. And more, the banking is going to be embedded in all of the other things. And again, we see this already today. This isn't a brand new phenomenon, but, it's the idea of, I want to have a mole removed from my face. So I'm at the cosmetic surgeon, and the surgeon says, hey, we can, finance this optional procedure for you, built right into the doctor's office. It's not, well, I need to go to the bank to get the money to pay for it. It's kind of built in. It's embedded in that experience. And I just think we are just scratching the surface on banking showing up where it's actually needed, as opposed to kind of a one-off separate function. So that would be my third one. And I think that creates interesting opportunities. I know the theme of this is innovation, Jody. All of those areas, and there's a bunch of other macro trends that I'm probably not thinking of, they create interesting opportunities and risks, by the way, for our companies in this space to be thinking about from a from an innovation and differentiation perspective.
That's great. Jamie, one of the things I've really appreciated is how balanced you've brought in terms of the balance you bring in terms of your perspective. It's a historical view, but also a future thinking view. It's a pragmatic view, but also an innovative view, kind of traditional way of banking and the new way of banking, how customers were served and how the new capabilities need to be built to serve them moving forward. So I really appreciated that. I'm sure the audience will as well. Thank you for joining us on the podcast today.
Jody, thank you. Really appreciate the invite, and thanks all for listening.
Thank you for joining another episode of Banking on Innovation. Make sure you subscribe to get future podcast episodes, or follow us on Twitter @Personetics or on Personetics.com.